Welcome to the Fintech Talents Festival. I'm here with Nick Jones, who is the CEO of Zumo Enterprise. How are you today, Nick?
I'm good, thank you. Good.
So could we start off by you telling us a little bit about Zumo Enterprise and what you do?
Sure. Well, Zumo generally is a blockchain fintech platform. We have a consumer business, which is an app which comprises non-custodial and custodial wallets and exchange platform. We're one of the FCA registered crypto assets businesses in the UK, and over the last year we've been focusing on taking that stack out to market as a crypto as a service solution for fintechs, larger fintechs and banks. Going well, growing nicely despite kind of current market conditions.
Yeah, I mean that's an interesting point to pick up on. I mean, there's a lot of sort of news going on around the crypto space generally. Have you seen any of that really affect the conversations you're having? I mean, what have you seen in the market?
Well, look, I mean, the last, let's say 6 months since June have obviously been, difficult times in the crypto space. I think we're probably seeing the end of a cycle characterised by some fairly kind of fast and loose business practices, not a great deal of care being paid to end customers and how their funds are being looked after or not really being treated in a particularly responsible way. And I think you could go to the heart of any of the big blow-ups that there have been over the last 6 months, and that's at the core. That's at the core. Lack of governance, lack of real kind of customer care, customer duty. So we can't hide from the fact that it's been the challenging conditions and that consumer confidence has definitely been knocked in the space, as we've seen in other cycles in the space. And that's obviously unfortunate, and it's one of our job as an industry to address those end customer concerns around building businesses which are built on better fundamentals. So strong governance, acceptance that some regulation is going to be a good thing, particularly if we're going to be holding users' funds. And the dream, the Web3 dream, that everything's non-custodial and held on chain, and is some way away from being realised. So we have to accept there's going to be this middle path with this, with the CeFi, DeFi bridge piece is going to be there. And if that's going to happen, then we need to, as an industry, we've got to take that, very, very seriously as it is taken in traditional finance, or certainly since the financial crisis in 2008, since regulation got a lot more stringent in that space. So I think we need to kind of aspire to those standards. I mean, interestingly enough, on the institutional side, I think this is seen as a bump in the road, not something which is making them, making that sector sort of turn tail and head for the hills. We're not seeing that at all. I think if anything, it's making everybody realise that your choice of partner, whether it's on KYT or whether it's on who's going to be doing exchanges for you, who's going to be providing custody, these are really fundamental decisions which are going to impact on whether it's a good brand association for you or something which is going to be reputationally difficult. So what we're seeing is that those institutions are really focusing on working with businesses who've got regs, strong governance, something sensible to say on the broader ESG piece, and feel like kind of grown-up companies that they can engage with, and where you can write down risk, because that's what for larger institutions in the space, they know the direction of travel, they know that their user bases under 30 are heavily invested in this space and going to carry on investing in this space, and they need to stay relevant. And there's this tension between wanting to stay relevant and wanting to offer the products and services, but needing to write down risk to a point where it's tolerable. So they're looking for partners, like us and amongst others in the space who have been building slowly and trying to build businesses that are kind of worthy of those types of partnerships. So yeah, it's interesting times. It's been an interesting temperature check the last couple of days, and we have not had a conversation here which has gone, no, that's it, we've decided we don't want to engage. It just we still want to engage, but we want to be really, really sure that we're engaging with the right people.
Absolutely, and that makes a lot of sense. With that in mind, would you be confident enough to say what you think might happen next in the sort of digital asset space, or if you'd rather not put your neck on the line, what you'd like to see happen next?
No, I mean, I think there's a couple of clear trends there. So I think that in terms of, there's a clear opportunity for banks and larger fintechs who have those kind of governance wrappers to take on things like custodianship of users' funds and to make sure that those funds are one-for-one backed, to make sure there's a clear audit layer there, to make sure those funds aren't being risked. So I would be very unsurprised to see the next iteration of big kind of CeFi, easy sort of buy, hold, and sell cryptocurrency type products having very familiar logos on them, in the way that we've seen Revolut making a big success out of it. Santander in Brazil moving into this space. I would expect the next, at the start of the next uptick cycle, there'll be some household names offering these types of PayPal type, quite simple buy, hold, sell, have some exposure to the assets, wall garden type products. And for a lot of users, that validity from having a trusted brand and understanding that there's, that their assets are safe and all these concerns that people now rightly have are being answered. So that would be one end of maybe more on the CeFi end of the spectrum. I would definitely see that as being a macro that we'll see. I kind of definitely would see that happening. I think on the other side, on the kind of the Web3 side of things, from our point of view, we definitely see that Web2 companies are realizing that to stay relevant, they need to introduce Web3 capabilities into their systems. So that will mean the other end of the spectrum. So non-custodial wallets, being able to use wallet as a proof of ID, as a source of funds to interact with the Web3 projects as these become more relevant and better for more people. As we see things like music, ticketing, art, we've already seen buying art. As we start seeing more and more things move into this new internet of value type economy, we're already seeing the old economic model of the internet beginning to fail. Facebook revenues down massively, all these ad revenues down enormously. As we start seeing that move in that space, that will be the other shift. And again, we're seeing institutional interest in what should we do in Web3, how can we provide our users with safe access, and how can we wrap that around. So I would see both. Those will happen. I think the first one I mentioned will happen faster.
Yeah.
It's easier to get your head around from a risk perspective. The second one is a bigger and more fundamental shift as we stop talking about Web3 and it just becomes the internet.
Yeah.
That will be the other big macro that I would stick my neck out in there.
All right. Brilliant. Well, let's meet again next year and see if you're all right. Thank you very much for your time.
Pleasure. Thank you.